Hi, my name is Abolofia. I'm the founder of Lyon Financial Planning. I provide advice-only financial planning to clients throughout the country. I'm a certified financial planner. I am a PhD economist, and I'm the head of the co-pilot service here at MaxiFi. I also participate in the ongoing office hours. Today, I want to put together just a brief video walking you through how to get started with Roth conversions and using the new optimizer in MaxiFi. So let's get started. I would start by going back to your base profile. This is where you've hopefully entered kind of all of your information to get your financial plan started here using the software. I've just created a hypothetical single individual here. Wanda's got $1 million in her traditional IRA and $1 million in a brokerage account in what are called regular assets in the program. So in kind of a taxable brokerage account. If you click on reports, you'll see Maximize Plan. If you click on Maximize Plan, you'll have three options. The one in the middle is Optimize Roth Conversions. We're going to click that. You will have an option to say, yes, we want to look at Roth conversions for Wanda, or no. And then you can select the different accounts that you want to consider for Roth conversions. So for example, if you have certain retirement accounts, maybe an employer plan that you can't actually consider for Roth conversions, you could deselect that here. Below, you will have an option, kind of a more advanced option here, where first we want to consider all possible plans. The other is we could limit the search to plans where we don't have a situation where the Roth conversions are reducing your discretionary spending potentially in the near term. Why might that happen? Well, you have to pay the taxes from cash or from your brokerage assets, your non-retirement assets. You want to pay the taxes from cash. And so if you don't have a lot of cash or you have limited cash flow or something, you could end up with a situation where your spending is forced down because you're doing all of these Roth conversions, and you might not want to consider those. So you could ignore certain plans. For now, I'm going to consider all possible plans. Hit continue. This might take 5-10 seconds. It might take a couple minutes. While this is running, I just want to talk through kind of Roth Conversion 101. So why in the world would anyone want to do Roth conversions? Because what you're doing is basically paying a whole bunch of taxes now. The idea is that by paying more taxes now, I might be able to actually reduce my taxes in the future. So Roth Conversion 101 is if I'm in a otherwise kind of low income tax bracket year, and I expect to be in a higher tax bracket in the future, maybe I'm in those gap years in early retirement prior to Social Security, then I could do things like Roth conversions, realize more income, and pay taxes today at a lower tax rate and a lower tax bracket than I might otherwise be if I were to defer. That is certainly the case, and MaxiFi is capturing that. MaxiFi is also capturing some other interesting impacts, which are things like Medicare Part B premiums. So your IRMA, or your Medicare Part B premiums, go through their own tax bracket, and that premium depends on your prior year's income. So we can also think about prepaying or paying more in Medicare Part B premiums now to potentially reduce Medicare Part B premiums in the future. Social Security benefits are also taxed at different levels depending upon your income. So they're going through their own kind of tax brackets. So if you do more Roth conversions, you might otherwise actually pay less in taxes on your Social Security benefits in the future. Another thing is by moving money into a Roth account, there are no required minimum distributions or RMDs. So you might be able to actually get more tax deferral for longer by putting money in the tax-free account versus in the tax-deferred account. That's just a couple of some of the kind of the nonlinear effects that are coming into play with the Roth conversion optimizer. So you'll see high level that Wanda in this case could save over $80,000 in her lifetime by doing Roth conversions, and that could increase her discretionary spending year over year by $3,400 adjusted for inflation. If you click on retirement account changes on the right, you'll see kind of the specific recommendations. This is a go big or go home situation. Not always the case, but is the case here in this example. The program is recommending that Wanda convert her entire traditional IRA, so $1 million moving from traditional to Roth. And below you'll see how it's recommending she does that over time. So it's saying maybe about $200,000 a year over the next 5 years as she approaches age 70, at the time at which she is filing for Social Security. There are other ways in which we can analyze the Roth conversion. and look at the different reports. We'll save that for future videos. I hope this has been helpful. Please let me know if you have any questions, and have a great day.